And today it's a great day, so we're going to be treating another topic, which is order block, and this is the full advanced course from my paid mentorship. All right, so I want you guys to just do me a favor. Make sure you click on the subscription button and click on your notification button so you can always get videos like this. We drop them every week. At least if we don't drop them on Fridays, for some reasons we will drop them on Saturdays, okay? And in worst case scenarios, you can actually get them on Sundays, okay? So but definitely every week you're gonna get videos like this, okay? So without wasting much of your time, let's go straight to today's classes, okay? So today we're going to be treating order blocks, and this is the full course, and we're going to be explaining a lot of things on order blocks, okay? Now these are the topics we're going to be covering for this order block full advanced course, and the first thing we're going to be looking at is what order blocks are, and we're going to be moving on to how to identify order blocks. Then we're going to be checking out the types of order blocks and the rules and criteria that actually makes a quality order block. Then we're going to be looking at the last but not the least, which is how to utilize these order blocks, or how to use order blocks in general, okay? So let's move straight to the first one, which is what are order blocks, okay? Now order blocks are areas formed on the chart after prices has made significantly an impulse move. Traders believe that these areas are potential zones for prices to most likely impact the market. So most traders go ahead to place their buy and sell orders on this zone, okay? So this thing is very straightforward, okay? So like I said, these are areas formed in the chart after prices has made a significantly impulse movement. Now let me show you what an impulse movement is and how to identify them on the chart. Let's say we were having a bearish structure, okay, and definitely prices just broke this bearish structure. Prices had already made an impulse move, okay? Breaking this structure, prices has made an impulse move, okay, to the upside. So immediately we have this kind of move, we definitely most likely going to have we most likely going to have a valid order block around the zone, okay? So it doesn't really necessarily need to be in this form. You can also have it in a continuous trend. Let's say we are having a bearish trend, okay? We're having a bearish trend this way, okay? Let's say this is we're having a bullish trend this way, I'm sorry. So let's say this is the latest bullish trend, and we had a reversal to this zone, and prices was just moving significantly in this zone. Now in this kind of area we don't have any order block, but immediately prices move up, or rather come down, okay, make that move to break any of this structure, be it this lower high, or definitely this higher low, okay? Once we have this kind of move, we most definitely gonna have an order block. Let's say it breaks this move already, it's already showing that it is in it has changed its character to a bearish trend. So we are most likely going to have a order block somewhere around here, okay? Or most likely prices are going to seek much more liquidity to come to this area. So as soon as prices goes and reverse to this area, we're most definitely going to have price continue in that downward move, okay? So that's what an impulse move means, okay, in general. Now let's move to the next one, okay? How to identify order blocks, okay? Order blocks are mostly formed after prices are just made a break of structure or a change of character. This can either occur in a bullish or bearish scenario. In most cases we get order block in a continuous trend, okay? Like I said, the price need to make a bullish trend, okay? As we're making this bullish trend upward, we are going to be having order blocks somewhere around here. We're going to be having order blocks here, and we're going to be having order blocks here as soon as we are making this movement. And even in a bearish movement of this form, we are most definitely going to be having order blocks as well, okay? So we are going to be having order blocks. Immediately prices makes an impulse move, that is breaking any of this structure, okay, breaking probably a lower high or a higher low, we are definitely going to have an order block according to the direction. Okay, now it now depends if the order block is going to hold or is going to be rejected, and that will take extra confirmation to actually go about that. Okay, and now this is a continuous bullish trend over here, and this is a continuous bearish trend over here. Okay, and we can also have order block once we have what, a change of character. Okay, so this is a bearish trend and we just change this character. We're most definitely gonna have order block here to continue the journey to the upside. Okay, so that is just how to identify this order block. Okay, now let's move to the next one. Okay, type of order blocks. Okay, the first one we're going to be looking at is what, wick based order block, and the next one is going to be our primary order block. Then we move over to the standard order block. Okay, so let's move straight to the first one without wasting much of our time. Okay, now what are wick based order block? Okay, this type of order block occurs when the first bullish or bearish candle form has a wick that is greater than the entire body of the candle. In this scenario, only the wick of the candle is considered to be the order block. A wick based order block also reduces a trader's risk exposure on the market. Okay, so like I said, we have different type of order block and different ways this order block can be used and be implemented, or how to actually identify these things so that you don't place your orders in areas that probably your trades are going to miss out, or they're not going to get to that areas and stuff like that. So you need to understand what type of order block this trend is forming and what is the potential for it. And we also have we have this kind of order block, like the flip zone order blocks and stuff like that, and those are things I will be explaining probably in my next video or something like that. So I'll be explaining those ones as well. So these are just things that will just help know the exact places you are going to actually fix your buy and sell order and stuff like that. Okay, so if you understand all this type of order block, you would know the exact one to use in a particular market condition. Okay, so like we explained this wick based order block, I say when these things are from, the only area that is most likely able to impact the market is the wick of that order block form. Okay, so now let's see an example of what a wick based order block will actually look like. Okay, now you can see we already have a breakout structure at this level, which indicate that we are in a bearish scenario. Then we broke downwards to this area. Now you can see this first candle, and you can see the body is little and the wick is very long. Okay, the wick is actually greater than the whole of this body. Now all you need to do when you see this kind of scenario is just identify the wick of that candle, and the wick of that candle that formed this bearish move or bullish move is going to be the order block. Okay, it's just quite very simple that way. So we only highlight the wick of that candle, and that candle is going to be the order block. And in some cases you can even use the whole of the body of the candle. Is most definitely still going to impact the market, but just make sure you are putting your stop loss on the swing high or the swing low, or probably, let me put it this way, make sure your stop losses are on the swing level of any of this type of order block you're going to use. Okay, so let's move to the next one without wasting much of our time. Now let's see the primary order block. Okay, this type of order block is from when prices fail to mitigate an impulse movement after a strong change of character or a movement has occurred. It is usually the first candle formed just after a bullish or a bearish movement in the market. This kind of order block is formed because the market lacks momentum and has created a series of imbalances, and I hope you guys know what imbalances are. Okay, so let me just move to the chart and show you what imbalances are. So imbalances are majorly two candles that refuse to touch themselves wick wise in most cases. Okay, as we can see in this area, you can see in just a sequence move of this candle and this candle, you can see that this candle and this candle failed to actually mitigate themselves very well. Let me just change the color of this. Probably let me use this color so that it will be a little bit brighter than the initial color of the chart or design of the chart. So since it's in a yellow form right now, I hope you can see what I'm telling you. Okay, now let's zoom a little bit. Okay, now we can see that this candle, this is the first one, this is the second one, this is the third one. Okay, and now this one and this one has failed to meet each other. Okay, leaving a space. Okay, look at the space here. This is the space it is leaving. Okay, this area, it's leaving this space. Okay, so since we're having this kind of thing, we want to just identify what we want to identify that space and call it a fair value gap or an imbalance. Okay, and prices would need to meet up to that imbalance area, fill in that area and continue in its direction. Okay, now you can see right now that prices came to that area, fill in the area and continue going up. Okay, until now that it's kind of rejecting. Okay, for some reasons that I would explain probably later on in the next video. Okay, so that's what an imbalance means. And what is a balance? Okay, what is a balance area? This also has imbalance, so let's look for areas that are balanced. Now you can see this and this. We can have this 1, 2, 3, and you can see once we put this line here, we can see that the whole thing is meeting up to each other. So this is what a balance looks like, and this is what an imbalance looks like. Okay, you can see this one I just used just one line, and this one I am using 2 lines to highlight the imbalance that was made in that move. Okay, now this kind of order block is formed. Okay, like I said I was at imbalance. Okay, I said the imbalance needs to be filled up for the market to continue in its intent direction, and I explained it there. As we filled the imbalance, the prices started going up and stuff like that. Okay, in this scenario we highlight the order block formed and wait for prices to reach that zone. Okay, now let's take some example or an example of it. Okay, now this is it. We had this breakout structure at this level. Look at the breakout structure at this level, breaking this structure, indicating that we are in a bearish form. And we also have and as soon as we broke this structure, the move there was so huge. Okay, it was so huge, and prices could not just reach there immediately, and we had this imbalance. Look at what I'm telling you, here and here. Look at the imbalance from here to this area. Okay, so that's the imbalance that the prices created actually. So we had prices fill up this imbalance, and we had prices continue going in that bearish move. Okay, so I explained what imbalances are, and this is what the primary impulse order block will look like. Okay, now let's move on to the standard order block. Okay, I said this is the last candle before a sharp movement to the upward direction or downward direction. Traders see the zone as an order block because it represents quality zone in the market and has a lot of buy and sell orders seated at that zone. Okay, in most order block area that are from a lot of buy and sell order are most likely seated at that zone that did not initiate immediately. Okay, or that prices left because so much momentum in the market. Okay, the whole volume in the market was too much, and prices could not pick some orders probably in the bullish trend or the bearish trend. Okay, so we have a lot of orders seated at that side, so we need prices to actually reverse to that area, pick that order and continue moving in the intent direction. So we highlight the zone and wait for prices to reach the highlighted zone, so the highlighted zone rather, so we can actually execute the trade as well. Okay, now we can see in this area we see that we formed a bearish breakout structure, and we also formed this bearish breakout structure, and we had this clean imbalance price action at this side, and prices did not properly fill up this imbalance area. Okay, this is what prices did. Prices went back, fill up that area, and we continue moving in our intent direction. Okay, so this is what a standard order block will actually look like. Okay, now let's move to the next thing. Okay, now the rules and criteria that makes a high quality order block. I said for an area to be considered an high quality and an order block zone, it must meet up this criteria. The zone or the area must lead to a breakout structure, a change of character. Like I said, if an area did not have a direction, or if the market trend is not showing a clear direction, then you do not have order block. Then you actually need to wait for a clear direction before you can start making your move or start implementing your move in the market. Okay, now let's say let's say we have prices in this way, in this way, in this way. Now the prices has not made any impulse move. So in this kind of scenario, we do not have any other block until we see prices break this higher low, or we see prices break the lower high to form a what? Lower low. Not until then we do not have a other block. Okay, now if we see prices break this zone, okay, let me remove this. Let's go to a cleaner area and do this. Now let's say we have prices going this way, and this way. Now we don't have any other block form, so we need to wait for prices to break this area or break this area to form higher high or lower low. Now as soon as we got that, we got prices went up and it was declared a what? Higher high. Okay, which is a bullish trend. Okay, now as soon as we have this already, we already have what? A other block waiting for us there, or an other block waiting for us there. So we wait for prices to what? Mitigate this other block and continue moving in our 10 direction. Okay, so that's why I said it must lead to a break of structure, or in most cases it should lead to a change of character, in which is this. Okay, now like I said, we have this as our what? Bullish structure. So this is actually a change of break of structure as well, and we now broke this recent lower high, which indicated a what? A change of what? Character. Okay, so we either gonna have this or this, then we most likely going to gonna have a what? Other block here waiting for us. Okay, so we wait for prices to actually reverse to that area and give us break of structure, a change of character, then we take that trade. Okay, so this is what we'll be looking at in most cases. Okay, so this is what we'll be looking at in most cases to take our other block. Okay, now I said it must be unmitigated. Now what is an unmitigated zone or stuff like this? An unmitigated zone are areas that are other blocks created and prices has not tested that zone or has not reached that zone at all. So once we see this kind of move, then we can start thinking of focusing on that zone and trying to get a trade out of that zone. Okay, make sure it's unmitigated, that prices has never reached that zone before. If it is once mitigated or if it has been used, then we do not consider that zone as a valid zone again. But in some cases, prices can still reject that zone and still play out the same way we wanted it to do, but it's most likely advisable for you to just avoid that zone and look for a fresh zone. Okay, now it must have imbalanced fair value gap. Okay, imbalances are very good in the market and it is a unique thing in the market. Okay, it helps to validate the market. Okay, so make sure the other block created actually comes with an imbalance. Okay, it's very necessary. Okay, now this is an example of what I'm showing you. So this is the breakout structure here, and we had the imbalance. Prices did not meet up that zone and it created an order block, and that order block made the move that we wanted it to make. Okay, so this is an example of it again, and this is what an imbalance actually looks like. Okay, now how to utilize the order block. Okay, once we have our criteria met up, so once we have it with a breakout structure, a change of character, imbalance, and it has never been used. Okay, we place a buy and sell order, putting our stop loss below swing low or what? Swing high level. Okay, so we just put our stop loss below or above it. Okay, any of the swing level, and we target 2 times our stop loss. Okay, this will just help reduce our risks in the market. Okay, so this is definitely how to use the order block, and let me just get some clear example. Okay, like I said, let me explain that. Okay, like I said, let's say we are having this bullish structure to this side. We're having this bullish structure to this side. Okay, let's say you met the market this way. You met the market this way. Now This has already made a break of structure. Okay, so we highlight the other block at this zone. Okay, this is the other block. Now you just do not take the other block this way. Okay, you go to a 2-time lower time frame than the time frame you used for the analysis. Okay, and wait for prices to make their way down to that area that was highlighted as the other block. Now you wait. As soon as they tap into this area unmitigated, then you wait for another change of character. Okay, then you take that other block here, then you target the zone. Okay, you target the zone, or you target 2 times that zone. Okay, so this will be the perfect other block zone for you. And so this is what I'm trying to explain. And make sure your stop loss is at this swing low. Okay, this swing low level, you can target just 3:1, and this is okay for you. Okay, this is fine for you. So this is basically what I'm trying to explain. All right, so if you enjoyed this video, make sure you subscribe to this channel, click on the notification button, and make sure you share to your friends so that they can learn as well. All right, thank you. See you next week as well.